Works. Hey, this is Marcus Rubio giving you your pulse update regarding the market. So this AI actually I have with Claude, I have set up in a certain way to actually be able to pull data so we can actually look at the data and extract important information that's out in the market today. So we're going to go over just a couple of basic things. First of all, we're actually going over the treasury yield and interest rates. As of today's data, it actually rose, the basis points rose about 2 points to 4.124, which was actually the release of December's FOMC meeting from the Federal Reserve. So that's saying that rates just went up a tad bit, nothing really major, but I noticed it's been declining over the last quite a bit of time, a couple of months, matter of fact. As we actually go down, it looks like the federal policy, they're looking at probably reducing the rates. They're looking at about another quarter rate that they actually did already drop down in December 9th, but they're looking at not doing 2 rate drops next year, maybe 1, possibly 2, but they're looking at probably extending that out in 2027 as well. So we're going to see the rates being steady pretty much all of next year, a little bit lower as time goes on. So one of the things I would tell you to do if you actually are a lender right now, you probably want to actually reach out to your clients that actually bought a house in 2023, 2024, that had a higher interest rate, roughly around about the 7%. So you probably do an FHA streamline or just do some type of, refinance to be able to drop their payment down itself, especially if they're a vet too. So be a lot of benefits for a lot of people. Currently, the rates, you're looking at an average that you're seeing for today's rates being about, market's showing about nationally about 5.99 to 6.29. But that's just like an average. Every market's gonna be a little different. So talk to your lender if you want looking at refinancing, but it's actually, that's for a 30-year fixed. Forecasts are looking at for 2026, the Mortgage Banking Association is looking at expectation of 30-year fixed dropping down. They're showing here like a 6.4, which really doesn't make any sense. But they should be actually looking at dropping down next year, probably another little about 25 basis points or so, which equals out the market probably is going to drop down maybe about a quarter at maximum throughout the whole year. So not a huge drop, but definitely we're going to be maintaining the actual interest rates, which when you look at the housing is definitely going to make a huge factor in this. Housing is right now showing that the national home prices index year over year has been a 1.4. So it's been actually increasing. So what's going to actually compose of this is going to be 20 of the major cities. It's going to be a 1.3 year over year increase, which tells me and shows me that there's going to be a little bit more homes on the market. We already know that new home builders are building more homes. Matter of fact, they're trying to give as many incentives for people to buy homes. So as that actually occurs with more homes on the market, people that are looking at trying to resell their homes, their current homes, might have to be more competitive when it actually comes to the pricing itself, because there's actually not a lot of buyers in the market. There's still a lot of homes in the market, and that actually happening is going to be causing the price to probably still go down slowly, possibly as the values of the homes decrease slowly, because there's still a lot of homes in the market, not a lot of buyers, but with the interest rates dropping slowly, it's going to be more possibly first-time home buyers coming into play. They're still going to have different objectives to be able to handle the pricing of homes based on their debt-to-income ratios, but there's a lot of opportunity for a lot of different people to be able to go off and purchase homes. So let's take a look at the California market very briefly. So the average home market in California that's being marked, because we're in California, is showing 754,304, which it looks like it's actually down to about 2.25% year after year over the last 3 years or so, or two and a half years. So it's making a big difference. And let me see here. We're going to go to, let's skip commercial. We don't do a lot of commercial items. I may go into commercial a little bit later on in the future. You see what might be very interesting for you guys. So economy itself, if you're actually more into economics, You see here, consumer pricing or consumer spending actually went up. So we know it because not only Christmas, but we're actually seeing major keys with the economy, with inflation and the GDP, showing the consumer pricing actually went up about 2.5% on the second quarter, went up to 3.5%. So just definitely showing that there's a lot of people going out there spending money. Even exports, items going out of the U.S., it shows being at a positive for 8.8, which is actually quite a bit. So it shows that a lot of companies are actually exporting a lot more items outside. Let me see tariffs, gas prices. I'm not worried. California is like really hit on gas prices. I'm not going to go in that situation right now. And let's go down a little further to show what else the market shows for today. We're looking at, this was actually going to be pretty interesting. You're going to like this if you're actually dealing with stocks or investments. 2025 is actually pretty crazy when you actually start thinking about investments. If you're looking at investing, and I'm not a financial advisor or nothing like that, but it shows the S&P 500 for 2025, the year to date. Imagine we're at the end of the year right now. They're currently at 17% increase. So you imagine your actual investment increases 17% over the year for year to date for 2025. So depending on how much money you had in there, it's quite a bit is actually increased. But your NASDAQ, if you actually invest in NASDAQ, it actually went up over the whole year 21%. So that's quite a bit of high percentage, better than your 0.0001% you make at the bank on your savings account, right? So huge difference, huge difference. Wall Street's looking very bullish on the actual market, the way the market's actually going. Key indicators, Nvidia, which is actually the chip company, they actually had a huge increase of 39% year to date as a key mover on the market. Let me see, I want to go into more other investment items. Let me see. Going to go over just basic key takeaways. Market interest rate's going to be stable, showing at least the high 5 to 6.25% interest rate for the first quarter. That's what the market's looking at. First quarter of 2026. So refinance opportunities for the ones at 7%, like I mentioned earlier, to be able to get sub 6% rates, possibly with some lenders. So you may be able to want to talk and shop around to be able to see who's going to give you the best price. Feel free to reach out to me if you like. But you don't have to. It's just actually information for you to be able to assist yourself and hopefully save some money. Housing market opportunity, great housing reset underway. Great housing reset, how do you like that one? Stalled appreciation, which means the actual pricing is not actually increasing on homes because the pricing of homes have been stalling. It's been stalled for quite a while. Matter of fact, it's been decreasing in a couple different locations. Increase of inventory, which we know of just regular home sales in the market, but new home builders, and renew buyer activity, new buyer activity. So there's going to be a lot of buyers hopefully coming to the market based on the the actual interest rates. So hopefully people will be able to go off and get homes and take the opportunity. One thing you need to look at too, if you are in the real estate industry or mortgage industry, timing for probates and trust based on that situation, based on baby boomers transferring their equity, or I should say their profits that they've actually had to their heirs. So that's one you might want to look at based on the way the market's going. And let me just go over Fed policy very quickly. They're looking at no more than 2 rate cuts expected in 2026, like I did mention based on my readings. Longer for higher, higher for longer persistence. January meeting likely to pause. So they're probably just going to maybe drop the rates down a little bit, right? Maybe another quarter as far as the banking side to drop rates just slightly. We should see that. And otherwise, that's all the news I have for you today. And come back to me tomorrow. I'm hopefully do this every single day. I'm not going to use the word hopefully. I'm going to try to make sure I definitely do this to be able to provide as much data and market that's coming into the market. So If you have any questions, have any concerns, reach out to me, but see you soon. Thanks a lot. Bye-bye.